Question 7. Is the CIBR ETF structured to be tax efficient? The tax efficiency of the CIBR ETF depends on several factors, but it generally offers some advantages compared to directly investing in individual stocks within the cybersecurity sector. Here's a breakdown. Potential tax advantages. Focus on long-term capital gains. The CIBR ETF primarily invests in companies for the long term, aiming to benefit from their growth. When you sell your ETF shares after holding them for more than 1 year, depending on your tax jurisdiction, the profits are typically taxed at lower capital gains rates compared to ordinary income tax rates. Reduced trading activity. Since CIBR is an ETF, it trades throughout the day. Unlike individual stocks, you're not obligated to buy or sell every time the price fluctuates. This can help minimize the number of taxable events, capital gains, or losses you experience. In-kind redemptions, U.S. specific. If you hold CIBR within a tax-advantaged account like a retirement account, IRA, 401k, in the U.S., in-kind redemptions can be beneficial. During in-kind redemptions, the ETF issuer might deliver underlying securities to the authorized participants, large institutions that create and redeem ETF shares, instead of cash. This avoids capital gains realization within the account until you eventually sell the underlying securities. Potential tax considerations. Underlying holdings. The tax treatment of the CIBR ETF's holdings can impact its overall tax efficiency. If the ETF invests in companies that distribute a significant portion of their profits as dividends, these dividends might be taxed at ordinary income tax rates depending on your tax bracket. Foreign holdings. If CIBR holds securities from companies domiciled outside the U.S., you might be subject to foreign withholding taxes on any dividends distributed. Expense ratio. The expense ratio of the ETF represents an ongoing cost that reduces your potential returns. While it's not a direct tax implication, it can affect your after-tax performance. Question 8. Who are the counterparties involved in the operation of the CIBR ETF? Are there any potential risks associated with their creditworthiness? Several counterparties play essential roles in the operation of the CIBR ETF, and their creditworthiness can impact the ETF's efficiency and potentially pose risks to investors. Here's a breakdown of the key players and potential considerations. Counterparties in CIBR ETF operations. 1. ETF sponsor/issuer. The sponsor, typically a financial institution like First Trust Portfolios in the case of CIBR, creates and launches the ETF. They are responsible for the overall structure and operation of the ETF. 2. Authorized participants, APs. These are large financial institutions like investment banks that deal directly with the ETF issuer. APs create and redeem large ETF share baskets, ensuring sufficient liquidity for investors to buy and sell on the stock exchange. 3. Custodian. The custodian, often a large bank, holds the ETF's underlying assets, stocks of companies within the cybersecurity sector for CIBR. They are responsible for the safekeeping and record-keeping of these assets. 4. Market makers. These firms help maintain liquidity by continuously quoting bid and ask prices for the ETF shares on the exchange, Nasdaq for CIBR. They facilitate smooth trading by ensuring there are buyers and sellers available. Creditworthiness and potential risks. The ETF sponsor, custodian, and authorized participants are all crucial counterparties. If any of them encounter financial difficulties or become insolvent, it could disrupt the ETF's operations. For instance, a custodian's insolvency could lead to difficulty accessing the underlying assets of the ETF. Financial problems with an authorized participant could hinder the creation and redemption of ETF shares, impacting liquidity. Mitigating risks. Spreading risk, ETF issuers typically select counterparties with strong credit ratings and a proven track record. They might also spread custodian and AP relationships across multiple institutions to reduce reliance on any single entity. Transparency, look for information about the ETF's counterparties in the prospectus or on the issuer's website. While the specific institutions might not be disclosed publicly, the issuer should outline their selection process and risk mitigation strategies. Question 9. How liquid are the underlying holdings of the CIBR ETF? Could there be challenges in rebalancing the portfolio during periods of market stress? The liquidity of the underlying holdings in the CIBR ETF can impact the overall tradability of the ETF itself and potentially pose challenges during rebalancing periods. Here's a deeper look at these factors. Liquidity of holdings. Index methodology. The Nasdaq CTA Cybersecurity Index methodology likely focuses on companies with a minimum market capitalization of $250 million. This indicates a bias towards established, publicly traded companies within the cybersecurity sector. These companies are generally more liquid than smaller, less established firms. Statistical sampling. CIBR most likely uses statistical sampling to replicate the index. This means it doesn't hold all the index constituents, but rather a representative selection. The ETF issuer likely prioritizes including more liquid holdings within the sample to ensure efficient buying and selling when needed. Challenges during rebalancing. Market stress. During periods of market turmoil or economic downturns, the liquidity of even larger companies can deteriorate. Investors might become more risk-averse, leading to lower trading volumes and wider bid-ask spreads for all stocks, including those held by CIBR. Rebalancing needs. The CIBR ETF rebalances the holdings semi-annually to maintain alignment with the underlying index. If certain securities become illiquid during market stress, rebalancing could become challenging. The ETF might need to adjust its buying or selling activity or deviate slightly from the target weightings to maintain orderliness and minimize tracking error. Mitigating strategies. ETF issuer expertise. Reputable ETF issuers have experience managing liquidity risks. They might employ various strategies during rebalancing, such as gradual portfolio adjustments over time to avoid large-scale buying or selling during stressed market conditions. Utilizing creation and redemption mechanisms with authorized participants, APs, to manage liquidity needs efficiently. Temporarily holding cash in place of specific illiquid securities until market conditions improve. Question 10. Are there any other ETFs that track similar indices or investment strategies? How do their expense ratios, tracking errors, and liquidity compare to the CIBR ETF? Yes, there are several ETFs that offer exposure to the cybersecurity sector, employing similar index tracking or thematic investment strategies. Here's a breakdown to help you compare them with CIBR. Alternative cybersecurity ETFs. ETFMG Prime Cybersecurity ETF, HAC tracks the MVIS Global Cybersecurity Index, offering global exposure to cybersecurity firms. Consider factors like expense ratio, slightly higher than CIBR, around 0.60%. Tracking error, might differ due to a broader global index. Liquidity, potentially lower liquidity compared to CIBR due to the inclusion of international holdings. iShares Cybersecurity Tech ETF, IHAK, tracks the Neuberger Berman Cybersecurity Tech Index, focusing on a combination of cybersecurity and technology companies. Evaluate aspects like expense ratio, slightly lower than CIBR, around 0.47%. Tracking error, might be higher due to the broader technology sector inclusion. Liquidity, potentially higher liquidity compared to pure cybersecurity ETFs due to the technology holdings. Global X Cybersecurity ETF, BUG, tracks the ISE Cybersecurity Index, offering a more concentrated selection of US-listed cybersecurity companies. Consider these points. Expense ratio, lower than CIBR, around 0.50%. Tracking error, potentially lower due to a narrower index. Liquidity, might be lower due to the smaller number of holdings. Question 11. Are there any actively managed funds that invest in the same asset class or sector as the CIBR ETF? How have these funds performed historically compared to the ETF? Yes, there are actively managed funds that invest in the cybersecurity sector, offering an alternative to the passively managed CIBR ETF. Here's a breakdown to help you compare them. Actively managed funds in cybersecurity. These funds employ portfolio managers who actively research and select individual stocks within the cybersecurity space, aiming to outperform a benchmark or the broader market. Here are some key aspects to consider. Higher expense ratios. Compared to CIBR's expense ratio of 0.59%, actively managed funds typically have expense ratios ranging from 1% to 2% or more. These fees cover the salaries of portfolio managers and their research teams. Potential for outperformance. Skilled portfolio managers might outperform the market by identifying undervalued companies or capitalizing on specific trends within the cybersecurity sector. Risk of underperformance. Actively managed funds can also underperform their benchmark or the market if the manager's stock selection decisions falter. Question 12. Could it be achieved similar exposure by directly investing in the underlying holdings of the CIBR ETF? Consider transaction costs and diversification benefits. While it might seem possible to achieve similar exposure to the cybersecurity sector by directly investing in the underlying holdings of the CIBR ETF, there are several challenges and limitations to consider. Transaction costs. Commissions. Each individual stock purchase incurs a commission fee. With a potentially large number of holdings in the CIBR ETF, depending on the specific index methodology, the cumulative transaction costs of buying all the underlying stocks could be significant, especially for smaller investment amounts. Bid-ask spreads. The difference between the bid, highest price a buyer is willing to pay, and ask, lowest price a seller is willing to accept, price for individual stocks can add to your overall costs. Diversification. Number of holdings. Replicating the diversification offered by the CIBR ETF, which might hold dozens of companies, would require a significant investment capital to purchase individual stocks in appropriate weightings. This can be challenging for many investors. Rebalancing challenges. The CIBR ETF rebalances its holdings semi-annually to maintain alignment with the underlying index. Manually replicating this rebalancing process with individual stocks would be time-consuming and potentially costly due to additional transactions. Other considerations. Market impact. If you attempt to buy large quantities of individual stocks to mimic the CIBR holdings, your buying activity could influence the stock prices, potentially driving them up and affecting your overall entry cost. Research and time commitment. Effectively replicating the CIBR ETF requires ongoing research to keep up to date on the underlying holdings and their weightings within the index. This can be a significant time commitment for many investors. Benefits of CIBR ETF. Cost efficiency. The expense ratio of the CIBR ETF bundles the costs of buying and holding the underlying securities, offering a more cost-effective way to gain diversified exposure compared to individual stock purchases. Convenience. The ETF provides a one-stop solution for investing in the cybersecurity sector, eliminating the need for individual stock selection and rebalancing. Liquidity. CIBR trades on a major stock exchange, offering investors easy entry and exit points. Alright, that's all the time we have for the CIBR ETF today. So, to recap, the CIBR ETF offers a convenient, diversified way to invest in the cybersecurity sector. It avoids the high transaction costs and management challenges of buying individual stocks. However, there are expense ratios to consider, and it might not perfectly capture the entire cybersecurity market. Let us know in the comments below what you think about the CIBR ETF. And don't forget to like this video, subscribe to the channel, and hit that notification bell to stay in the loop on all things ETFs. We'll see you on the next one.